Hey everybody, Boris, let's begin Forex. Welcome to the weekly technicals for March 18th to March 22nd, 2019. For the majors, euro dollar, dollar yen, and pound dollar. The big question ahead of us is, does risk on continue? This week we saw, especially at the end of the week, a pretty serious stabilization in risk all across the spectrum in the majors, with euro really finding a bottom, cable, of course, doing its own thing on Brexit. The only question was dollar yen, which kind of weakened out as the week progressed. The levels so far have really shown us that the 112.50, the 112 effectively was a double bottom in euro for now, but it really needs to close about 13.50 to kind of make a challenge towards that 14.50 level and really put in a very, very strong signal that the euro for the time being has kind of sold out and has bottomed out. Dollar yen, on the other hand, looks very wobbly at these levels. It's getting pressed, I think, a little bit about on U.S. yields, and frankly, technically, it looks worse to the downside than it does to the upside. It looks like 111 could be the first hit rather than the 112. We'll see how the week develops, but yeah, it's very wobbly, and we don't have that much U.S. data in front of us, except, of course, the FOMC. And FOMC is expected to be relatively dovish, which is, of course, yet another variable that could press to the downside on dollar yen. Cable, on the other hand, looks pretty positive. As I'm recording this Saturday morning, U.S., new rumors are swirling around that DUP, the very hardcore right-wing Northern Irish Party, could be persuaded to support Theresa May deal. And it looks like essentially we're going to probably get the Theresa May deal coming up next week. We do have the EU summit on Thursday. That's going to be a very interesting point. There's basically really now two big stories in Brexit. Either they're going to take the deal with Theresa May and have a short extension and pretty much wrap it up and stay in the customs union as is, or they basically look for a much longer extension. Now, this is very interesting. The EU is probably not going to give them a longer extension unless they agree to a second referendum. So I think this is where Theresa May really has her opponents by the throat, because their choice is really take the deal that she already has and spin out of the EU under essentially customs union conditions, or risk the very, very, very high chance. In fact, I would say almost a 90% probability that a second referendum and Britain staying in EU as a result of it happening. So I think it's going to be a very interesting week as far as that goes. Certainly volatility in cable going to continue, but technically it looks much stronger now and certainly looking like it's ready for some longer term bounces. Now, on the economic front, not a lot on the plate here. We do have a little bit of echo data. Of course, echo data is just secondary. We do have UK data. This will be interesting. We're bearish UK data here on the earnings and the labor cloud front, because PMIs have been very, very soft. But I wonder just how little the market is really going to care about this, because, of course, it's all going to be about the wranglings in the UK Parliament as far as that goes. We also have the CPI data. That looks actually relatively bullish, according to Kathy, because there was a rise in prices as oil prices rebounded as well. So none of that is really going to have an impact on BOE, which meets a little bit later this week, because they're really not going to be focused on wages or labor. They're really going to be focused about managing the Brexit scenario. Only after there is a definitive resolution to that issue will we go back to caring about UK data as we go forward. Next, we have very, very shallow US data, just nothing much. We have the Philly Fed outlook, and really the big thing that comes in on the US side is going to be the FOMC decision, which is going to be Wednesday. Market expecting, of course, the Fed to remain stationary for the time being at 225. The reason why the market, I think, very rightly thinks the Fed is going to do nothing is because we've had very tepid retail sales out of the U.S. and no price pressures. CPI, PPI data all came in below expectation. There is no pricing pressure. There's no need for the Fed to change course. Maybe they will provide some sort of a mildly hawkish guidance by saying that they're seeing the economy stabilize and they may resume hiking as the year end goes by. But for now, frankly, I don't think the Fed wants to rock the boat. And I think they're going to stay very much on message that for now, the U.S. economy requires a steady neutral state, and they don't see any reasons to tighten the policy, and they are going to be very data dependent. So I think we really need to see the global situation. And I think that's really going to be probably the talk of the Fed, is they're going to point their fingers at the global demand situation, which still remains very wobbly. And only when that starts to pick up will they begin to feel like they have a chance to raise rates as they go forward. So we'll be watching that very carefully. And that's going to be the seminal event this week as far as the dollar goes on Wednesday. Now, taking a look at the charts here, the charts. Oh, sorry. Let's go to the daily charts so we get a better view. So the charts look interesting to me. So the euro here on the daily charts definitely looks a lot better than it did the week prior. So last week we had a big crash. We held. I said, if we hold the 12, that's basically a double bottom, which is exactly what we have now. We also managed to recapture the 20 SMA and just kind of holding it over here. But still, you can see this 30.50, such a critical resist level. If we can close above 30.50, very bullish sign that suggests forward momentum, and we have a reasonable chance to probably push ourselves to 1400. That's really basically the market saying that it thinks the worst in European theater is over. Remember, a resolution on Brexit is also a resolution on Europe because that creates far less uncertainty for the whole continent as well. So I think just kind of that feel-good vibe that you're starting to see at the end of last week could have a reasonable chance to continue. So for now, obviously, the fact that we hold the 20 SMA is positive, and the push is up to the 1400. After that, it becomes a much greater area of resistance, and really, you would need much more momentum to kind of push us through the 14 towards the challenging the 15, 16 level. But I think it's pretty confident at this point, when you look at it technically, that we've made a pretty decent double bottom, and now it becomes a buy to dip story rather than a sell the rally story on Euro. Cable also looks very good. Big push, of course, all the high volatility moves off Brexit. We've cleared the 500 SMA, still haven't had the cross here. This 33.50 is a big overhead hang. And I think only a definitive deal, that is Parliament saying, yes, we're going to passing the Theresa May deal, which at this point would essentially put UK on a path towards a soft Brexit. Only that resolution provides us with a push towards the 34s. Now, once we clear the 34s, what I think is interesting is that when you take a 10,000 yard view of this the situation, what you see is a strong bowl-like bottom here in cable, very well tested, and a break above the 34s really opens up. Let's just zoom out here. Really opens up like a very clean, clear long-term break towards the 135, towards the 135, 140 zone over the next quarter or so, as the market just sort of absorbs all the UK data and at this point starts to judge UK just by its growth differentials rather than by the political situation. So it looks positive. That's what the market is feeling, and I think you trust the technicals at this point for the upside, at least as far as that goes. The most problematic chart amongst the majors is yen. So yen had this big breakout at 111. We talked about that a couple of weeks ago. That that looked like a strong clean breakout, and indeed we did. It took us through moving average crossover, really created a nice positive flow, but yet this 112 really killed us. What was the high on the 112s here? It was 112.13. We couldn't get much beyond that. I've basically been selling off ever since, and now we're in danger of essentially making a lower double high, double top, which could then lead us all the way down to the 111 level. We'll see what the Fed says. We'll see how the market is feeling. Clearly, the rates in the U.S., this is the one thing that's definitely hurting the U.S. Dollar. Rates dropping to 259. I mean, we could be at 255 by the time the Fed starts talking Wednesday. That's massively bad for the dollar. We need to see the rates start to pick up. And that's essentially the bond market saying that they don't see a huge spurt in growth. They don't see any interest rate, any price increase of risk in the situation. And the yield is therefore being hunted down. So that's what's weighing on the dollar. That's what's weighing on dollar yen as we go forward. We'll see how that develops. That I think is the most problematic one. I would not be a buyer here until and unless we clear the 12s. We really need to clear the 12s definitively. Then that puts us in a much stronger constructive positive formation with a potential run into 114. At that point, the market becomes much more bullish dollars as we go forward. Right now, the market clearly is dubious, and so should you be. Wish you guys the best luck, the best trading. Boris, over and out.